Hi Darshan bhai, welcome to the show. Good morning.
Hi, good morning, Jignesh. Thank you for having me on this show.
Thank you, sir, for your time. Sir, there is a big event, Union Budget, and we would like to know your view and expectation for auto sector. So, sir, what is your opinion, sir?
Sure. With respect to the auto sector specifically, so one part of the focus is definitely expected to be on the EV sector and higher localization. So, as you know, the EV industry is currently at an inflection point, and considering the government has also shifted its focus on the EV space, this budget would provide an opportunity to bring out the changing reforms to boost the sector. The government has also been progressive on the transition from ICE vehicles to electric mobility, and this has translated into an explosive growth for the EV industry over the last 1 year alone. So, a boost from government, especially with respect to expanding the EV charging infrastructure and localizing the supply chain, along with certain benefits aimed at accelerating the adoption of EVs in India, will be the key things to watch out for. Additional efforts towards higher adoption and investment in greener technology and also encouraging higher localization beyond the current PLI schemes so as to increase the domestic manufacturing of auto components and facilitating higher auto exports from India can also be expected. Another important reform that the industry is looking forward to is the increase in the road tax rates, basis which the refund is granted against exports from India. So this is a new scheme launched last year, replacing the earlier MEIS, and it provides refund of non-creditable taxes in the supply chain on value of exports. The industry is of the view that the current roadmap rates notified for the auto sector are not enough to cover the non-creditable taxes, and thus are expecting an upward revision in the same. So this will also help in enhancing the competitiveness of the Indian players. We also expect the auto industry to remain an indirect beneficiary of the government's measures to boost consumption and investments in the infrastructure space. Also, the increased focus on rural spends by the government, as well as the steps to boost the rural consumption, will indirectly aid the two-wheeler segment recovery, benefit the tractor OEMs and the rural-focused four-wheeler OEMs, along with the ancillary companies supplying to such OEMs. Moving on to another important reform, which the industry is eyeing, is rationalization of the GST rates for all auto components to 18% from the existing rates of 18 and 28%. So having a uniform rate will help minimize the issue of the grey operations and the counterfeits in the industry, and it will also enhance the competitiveness of the domestic player. The other ask is for the reduction in the GST rate for two-wheelers from 28 to 18%, as the same are not considered as luxury goods in India, but are being taxed at the same level. So this will provide the much-needed pickup to the two-wheeler industry, which is currently standing at 9-year lows in terms of the domestic sales. Lastly, also there is a demand for having a uniform GST rate of say 5% in the used vehicle market from the existing 12 to 18%. However, given the current situation, the probability of government accepting such propositions with respect to GST appears to be less as it needs revenue right now. However, even if an announcement is made in this budget to express the intent to resolve this conflict in classification or consideration of lowering the rates will have a positive impact on the overall industry. So, while it remains to be seen whether these requests are addressed or not, the government's focus on the Atmanirbhar Bharat, including the initiatives to disincentivize the ICE vehicles and promote greener technologies, will remain the key areas to watch out for in the upcoming budget from auto sector's perspective. Also, just to add on, we do like some stocks which can be positive plays from a budget point of view. So we like Hero MotoCorp, Bajaj Auto, Escorts, Maruti and Ashok Leyland in the OEM space, whereas Endurance Technologies, Minda Industries and Minda Corp among the auto ancillaries. These are the stocks within our coverage.
Right, sir. Sir, just one question. What do you think about the commercial vehicle space?
So yes, one thing is that the government's thrust on the infra. So the spending which the government is doing with respect to promoting the infra push will definitely see an economic revival, which will push the CV industry volume. Apart from that, the scrappage policy, which was announced in the earlier budget, that will also help from a medium to long term point of view to boost the CV industry sales.
Right, sir. Sir, any risk that you see in the budget for the sector?
So one risk is that to promote localization, government might, increase the custom duty on certain auto ancillary components. So this might, lead to total cost increase for the overall car. So that might be one bit, but that will be in a gradual phased manner. So that everyone can look out for.
Right, sir. Sir, it was pleasure talking to you. Thank you so much for your time.
Yeah. Thank you for having me on this show.
Yeah.